If you're learning accounting, this quiz is for you. Hi, I'm James, you're watching Accounting Stuff, and in this video, I'm going to test your knowledge with 20 multiple choice questions. So grab a pen, play along, and don't forget to share your score in the comments. This video is sponsored by QuickBooks Online. Question 1. What is the primary purpose of financial accounting? Is it to manage internal business operations, to report financial information to external users, to forecast market trends, or to prepare tax returns? The answer is B. The purpose of financial accounting is to report useful information to a business's investors, lenders, and creditors. Question 2. In double entry accounting, total debits must equal total credits, equal total expenses, be greater than total credits, or be less than total credits. It's A. In double entry accounting, there are two equal and opposite sides to every financial transaction. Debits and credits are the words we use to record each side. Question 3. Which of the following accounts increases with a credit? Is it cash, cost of goods sold, accounts payable, or inventory? It's C. Accounts payable represents money a business owes to suppliers for goods or services purchased on credit. It's a type of liability represented by the L in dealer, so it's a normal credit account. This means credits increase it and debits decrease it. Question 4. Which of the following transactions keeps the accounting equation balanced? Is it paying an employee's wages in cash, losing inventory due to theft, buying equipment on account, or all of the above? It's D. In double entry accounting, assets must always equal liabilities plus equity. So every transaction keeps the accounting equation balanced. Question 5. Which of the following is classified as a tangible asset? Patents, goodwill, buildings, or trademarks? It's C. A tangible asset has a physical presence, which means it can be seen and touched, like a building. Question 6. Which of the following transactions would decrease a business's equity? Is it writing off an uncollectible receivable, receiving cash from a customer, issuing new shares, or earning service revenue? It's A. Writing off an uncollectible receivable creates an expense, which reduces profit and therefore equity. Question 7. Which of the following is an example of a liability? Is it equipment, sales revenue, rent expenses, or wages payable? The answer is D. Wages payable represents unpaid payroll that a business owes to its employees. It's classified as a liability because there's an obligation to pay out cash in the future. Before we get into question 8, I want to mention today's sponsor, QuickBooks Online. Running payroll isn't as simple as paying wages. You also need to calculate federal and state payroll taxes, employee withholdings, and employer contributions. If those numbers are wrong, your financial statements will be wrong too, and you could end up with unhappy employees or penalties from the IRS. That's where QuickBooks Payroll can help you out. QuickBooks Payroll automatically calculates wages, tax withholdings, and employer payroll taxes. It keeps track of what's been paid and what's still owed, so your payroll liabilities stay accurate and up to date. Instead of managing payroll calculations yourself, which can be time-consuming, you can automate the process, reducing errors and freeing up your time. If you'd like to make payroll simpler, you can check out QuickBooks Online with Payroll using my link in the description. That will get you the latest discount. Thanks to QuickBooks for supporting my work and for sponsoring this video. Question 8. Under the revenue recognition principle, revenue should be recorded when cash is received, an invoice is sent, a customer pays a deposit, or when it is earned. It's D. Under the revenue recognition principle, revenue is recorded as it's earned when the business transfers goods or provides services to the customer. Question 9. Which of the following transactions would not be recorded under the cash method? Issuing a payment for next month's rent, providing a service to a customer on credit, receiving cash from a sale, or paying a supplier today. It's B. Under the cash method, transactions are only recorded when cash is received or paid out. Providing a service on credit doesn't involve cash yet, so it wouldn't be recorded. Question 10. A business owner contributes cash to their business. What is the journal entry? Is it debit cash credit revenue, debit cash credit owner's equity, debit owner's equity credit cash, or debit expenses credit cash? It's B. Cash is debited, which increases assets on the balance sheet, and owner's equity is credited to reflect the owner's investment in the business. Question 11. GAAP stands for Global Accounting Audit Procedures, Generally Accepted Accounting Principles, Government Approved Accounting Policies, or General Analysis and Accounting Processes. It's B again. GAAP stands for Generally Accepted Accounting Principles. These are the rules and standards that companies in the US follow when preparing financial statements. Question 12. The main purpose of a trial balance is to prepare tax returns, to calculate profit, to record a business's transactions, or to check that total debits equal total credits. The answer is D. A trial balance is an internal accounting report that shows a list of all ledger accounts and their balances at a point in time. Question 13. Which of the following assets is usually depreciated? Is it buildings, land, inventory, or cash? It's A. Buildings are long-term assets with a limited useful life, so their cost is spread over time through depreciation. Question 14. A prepaid expense is classified as a liability, an asset, an operating expense, or a non-operating expense. It's B. Prepaid expenses represent payments made in advance for goods or services that will be received in the future. They're recorded as an asset because they're expected to provide future economic benefit to the business. Question 15. A business performs a service for a customer but doesn't invoice them until the following month. What journal entry should be posted on the day the service is provided? Is it debit cash credit service revenue, debit service revenue credit accounts receivable, debit accrued revenue credit service revenue, or debit unearned revenue credit service revenue? It's C. Accrued or unbilled revenue is debited to record an asset on the balance sheet, and service revenue is credited to recognize the income earned on the income statement. Question 16. How do you calculate gross profit using an income statement? Is it revenue less expenses, revenue less overhead expenses, revenue less operating expenses, or revenue less cost of sales? It's D. Gross profit is calculated by subtracting cost of sales from total revenue. It shows how much profit the business makes from its core operations before deducting indirect operating expenses. Question 17. The balance sheet is also known as the statement of operations, the statement of financial performance, the statement of financial position, or the statement of financial activities. It's C. The balance sheet provides a snapshot of a business's assets, liabilities, and equity at a specific point in time. Question 18. Which of the following is reported under cash flow from financing activities? Is it paying wages to an employee, collecting cash from a customer, borrowing money from a bank, or purchasing inventory from a supplier? The answer is C. On the cash flow statement, cash flows from financing activities involve cash received or paid to investors and lenders. Question 19. Which of the following is a common example of a control account? Is it accounts receivable, sales revenue, cost of goods sold, or the suspense account? It's A. Accounts receivable is a control account that summarizes the total amounts owed by customers. The detailed balances for each customer are recorded in the accounts receivable subledger. Question 20. A business closes its expense accounts at the end of an accounting period. What is the closing entry? Is it debit retained earnings credit expenses, debit expenses credit cash, debit expenses credit income summary, or debit revenue credit expenses? It's A. Expense accounts are temporary accounts with debit balances. When posting closing entries, we credit them to reduce their balances down to zero. And we debit retained earnings, which is a permanent account on the balance sheet. Bonus question. Net profit from the income statement flows through into the balance sheet. Is it assets, liabilities, paid in capital, or retained earnings? It's D. Net profit increases retained earnings, which is a component of equity on the balance sheet. That's how the income statement connects to the balance sheet. How did you go? Drop your score down in the comments. I'd love to see how you did. If you'd like to try QuickBooks Payroll, you can use my link in the description to get the latest discount. And if you're up for another challenge, check out my accounting quiz playlist over here. See you in the next one.